Lesson number 9, Bank Account and Bank Reconciliation. What is bank account? Bank account is used to do transactions conveniently with having a security, because when you do transactions in big amounts, you cannot carry cash in your hand. To open a bank account, you have to deposit a specified amount of cash at bank, and then you will receive a checkbook which is going to be used when making payments. You can collect cash, checks and other direct remittances to your bank account. You can see now the bank account is an asset to the business, because business give their money to the bank. In other hand, bank keeps record for the transactions and send a bank statement at the end of each month. But for its own purposes, normally business records transactions in its point of view. It is the bank account we are going to learn now. First of all, we will look into the relevant double entries for the bank account. First one, when depositing cash, the amount in the bank goes up. So, increasing asset is debit. Cash in the business goes down. Therefore, decreasing asset is credit. Now you can understand the double entry here when opening or depositing cash, debit bank account, credit cash account, or you can call cash book. Next, when withdrawing money, check and cash. It means if the business does not have enough cash in the business can withdraw cash from bank account. And third one, when issuing checks. To make payments, business has to issue checks. So the money in the bank goes down. So bank account should be credited. And debited to the relevant account. It may be for an expense or to pay off a creditor. When receiving checks, business is going to keep them for some time and later go and deposit at the bank. Because, for example, like big businesses like Electricity Board, Sri Lankan Telecom, each and every time when they receive checks, they cannot go and deposit. So they collect a bulk and deposit later. Remember that depositing only will increase the money at bank. Therefore, when receiving, we debited to the cash account and credited to the relevant account. Relevant account means it may be debtor or it may be a income. When you are depositing those collected checks, you can debit the bank account and credit the cash account, because the checks we have collected earlier, it's in the cash account, so you have to credit to the cash account, and when depositing they are going to the bank, so we debit it to the bank account. Next is dishonoring a check. What is dishonoring a check? It means bank will reject to give cash for those checks. It happens if enough money is not in the account to pay for that check, or errors occurred when writing and signing, etc. In that case, the previous entry should be reversed, meaning when depositing, you debit the bank account and credit the relevant account. Here we are going to reverse that entry by debiting the relevant account and crediting the bank account. When dishonored issued checks, when issuing, you credit the bank and debit the relevant account. Now we should reverse that entry. You should debit the bank account and credit the relevant account. Now we will move on to an example for preparing a bank account. These are the transactions you have given. Balance brought forward means that there is a balance from the previous month, and next one is received a check from a debtor 30,000 directly to the bank. It is direct remittances. Received direct remittances of dividend income, that is also direct remittance. And the next one is 6th of March, paid electricity bill via a check. It is issuing a check. So we are going to credit the bank account. Paid salary via checks 35,000. Again you have to credit the bank account, because when paying salary, bank balance goes down. Therefore, you have to credit it to the bank account. Received a check for investment income. Received a check. So, receiving check, remember that here we are not going to debit it to the bank account because it is received only. Next transaction is also like that. Received a check from a debtor 25,000, and you can see in 15th March those two checks which are received 10th and 12th deposited. So on 15th only we record these two transactions into the bank account. Dishonored the check rupees 25,000 deposited on 15 March. One of the check you have received on 12th March has been dishonored. And the next one is also dishonored the check issued on 6th of March. Here dishonoring the issued check. So you have to reverse the original entry or the previous entry we have done. Paid insurance fees 33,000 through a check. It is issuing a check, you have to credit it to the bank account. Owner encashed 12,000 for his personal use. That is also issuing a check. You can issue cash checks and encash that check and get the cash into the business. So we will see how you are going to prepare this bank account. Right? The first one is balance brought forward. It is debited to the bank account because you have a balance. It is an asset to you. Therefore, the bank account debit. And the first thing you have done here, you received a direct amount from the debtor to the bank. Therefore, you can debit bank account 30,000. And here you have received direct remittance of dividend income on 5th of March. That is also increasing the cash in your bank account. Therefore, you can debit that amount to the bank account. Next thing is paying electricity means cash goes down at the bank. Therefore, you can credit to the bank account. Paying salaries will also reduce your bank account balance, so you can credit that amount to the bank account also. And here you can see I didn't debited 10th and 12th checks into the bank account, but when you are depositing only, I have debited here. So it's altogether 40,000 amount. One of those check has been dishonored. So when you are depositing the received check, you have debited here. Therefore, you have to reverse that entry. You have to credit it to the bank account and debit it to the relevant account. And here you can see when you are issuing a check, 6th of March electricity, you have credited that amount to the bank account, but it has been dishonored. Therefore, you reversed the original entry. So debit here, then the bank account impact to the bank account will be 0. Right? Others two are reducing the bank balance, so you can credit them to the bank account, and then while going the normal procedure, you can balance of the bank account, then you can arrive 85,000 of a balance, that is debit balance in bank account.